Kolich, and I'm with my bud Jeff Newton here, and you are watching the
Home Buying Insiders Podcast. How you doing, Jerry?
I'm going good, buddy. How are you doing?
Not too bad for our first inaugural. Wait, it would be be initial podcast, right? Our
The
first.
initial podcast. Well,
Yeah.
you guys have done these in the past, but now we're trying
Yes.
to fire this stuff up again because what we are finding out every day when we're talking to people, there's lots and lots of questions out there. And sometimes you're like, man, I wish I could get some of this information out to the masses. And so this is one of the easiest ways to do it. I know there's a lot of podcasts and different places to get information now, but it's like, you know what? I always enjoy talking with you. So why don't we drop some knowledge on the folks, right?
Well, and not only that, I mean, hell, we got questions. I mean, you and I have been doing this for a real long time, and I mean, 20 plus years. And if I woke up with my head sewn to the carpet tomorrow, I still wouldn't be surprised because that's kind of how the market is and how the housing world is all the way around.
Right. It's like one day you're talking to a borrower and you're like, hey, guess what? Rates have gone down. This is looking great. And the next hour later, you're calling them, hey, guess what?
And then, yeah.
Locked it a minute ago because the market has just crashed on us.
Well, and if you don't like roller coasters, this market isn't for you. So
Yeah.
hopefully,
I think maybe we're getting some potentially good news, right? Tomorrow is the big PCE report that's coming out.
Yes, it is, and that's I think that's been anticipated over the whole month of. And when we say tomorrow, we're talking April 30th. I mean, I know we're not all. I think it's April 30th, right? Today
it is end of the month. End of the month.
Yep. Why not slide it in there at the very end of the month? I like it. But hey, you know what? Before we even get into that, thank God May's almost here. I don't know for any of you people that are out there that are in the Midwest like we are, and you're dealing with cold weather, and one day it's 80 and the next day it's 40. I know you got to feel like this too, man. Thank you, Lord. The weather's hopefully getting ready to flip a little.
You know, I saw this Instagram thing the other day, and this guy, they do these little reels or whatever, and it was weather in the Midwest, and he walks in one day, and he's got just kind of a mild thing on it. And it's like Monday, and then he walks in the next day, and he's in a full on overcoat with, because it's 20 degrees, and the next day he's in, a tank top because it's 80 degrees. So yeah. It's like every different day here in the Midwest, it can change. But it's sunny where I am. I know you're a little bit north of me in the city, but looks like the weather may be breaking a little bit.
It is actually sunny up here right now, which is I'm going to take it and be very happy about it.
Okay, well, let's continue with that because we may get some rays of sunshine tomorrow when it comes to the PCE report, right? And so, Jeff, that is the personal consumption expenditure report, right? It's the Fed's favorite, as they say, the Fed's favorite indicator when they kind of look at should they or should they not cut interest rates. And all indications, experts' opinions, and we like to report on those. But it looked like it may be going down tomorrow. What I saw is it's at 2.5 right now, and they're thinking it may go down to 2.2, and that core inflation may be following that as well and dropping from 2.8 to 2.5. So I know a lot of people have talked about, what are rates going to do? I mean, it's like if I had, a dime for every time I got asked that question. But this is kind of what we can use, right, as an indicator to what the Fed's may be thinking on down the road.
I think it is. I think it's one of the few things we can use out there. I mean, of course, again, it's hard. I don't have that crystal ball, and I must have left it at your office, but it's hard to really decide what they're going to do. And we watch and pay attention and all that, but the PCE report is a good indicator of what's going to happen. Speaking of that, we've got the Fed meeting in June. I know we wanted to talk about that a little bit.
June 17th is when they get together.
Yeah. So hopefully we'll see something there. I know there's a lot of pressure. I mean, look, let's just be honest. There's a lot of pressure on the Fed to cut that rate. I mean, not just from, the general public, but from the administration too.
I mean, and I think, what we're thinking and what we tell people too is, again, these are just predictions, projections, right? And the market reacts to these type of things, right? But we're thinking we may get a quarter decrease at that meeting in June, and they're forecasting, I believe they said there's a 75% probability that we'll receive a 75 basis point decrease by the end of 2025, which would be welcome news for mortgage rates. Right now, we know Mortgage rates do not follow, but over time, historically, they basically follow what the Fed fund rate does.
Yeah, I mean, I I agree. Number one, I do agree. I think we're going to see 75 basis points. I'm probably a little bit more headstrong on that, thinking we might see a full 100 basis points throughout the year. Uh,
Well, if that trend continues, yeah, I mean,
yeah, and look, we haven't even got into tariffs and what that's going to. I mean, I know we ripped that Band-Aid off right at the beginning of the year, and we hit with tariffs, and here we are, and but we're only really a month into that, and we haven't really seen the full scope of what that's going to do. Now, you might be in a camp where you don't think it's a good thing for us, but I'm in the camp of I see tariffs playing a strong role in the mortgage industry and bringing those rates down. And knowing the administration does have as an eye to bring those rates down is huge as well. Now we'll see what the Fed does, and we'll see how it affects interest rates. I mean, there's a lot more that goes into it when we talk about treasury yields and all that kind of stuff as well for the long-term rates. But
yeah, let's bring this up. This is one of my favorite charts that I like to talk about. And I know when I show this to our borrowers, sometimes they're like, "What are you showing me, man?" The easiest way to read this is green is good for rates, right? Red, not so great for interest rates. And these little ticks, y'all, these are basically what we call candlesticks. So it just represents a day in time. One of my favorite things I like to do, Jeff, I like to go back to the max. And it's like, hey, this was COVID over here, right? This is when rates were super, super low. So basically, the higher this is, the lower interest rates are. And then you can see what this point in time, this is back in September, and here we approach October of 2021. And you can see that we start to go down, which means rates are going up, right? And so what we've seen really here over the last 3 months is what you were talking about earlier. Like right here with all this green, Jeff, as you can see, rates are getting what? They're getting better. And then they kind of take a little bit of a consistent and approach, and we're like, okay, things are feeling a little bit normal. And then all of a sudden, in the beginning of April, the tariff talks kind of happen and all these things, and then we just drop. And so there's been a lot of what you said earlier, just kind of roller coaster of where things are going. So,
well, and keep that up there. That right there, where you see that drop at the beginning of April. When you were saying earlier, we talked to a borrower or customers and people, and then all of a sudden, an hour later, we got to change our tune. I mean, that right there, that there at the beginning of April, there was a big change of tune real fast.
Right here, April 7th.
Yeah, I remember it very vividly, unfortunately. But that's where it gets crazy. I mean, that's where, number one, that's where having a professional, whether it's the home buying insiders or whoever it is, having a professional that follows the market, knows what's going on, give you the advice is so big. And guys, if you ever want to talk to us, you can give us a call at 855-699-1424. But that's where having that professional is important, because that market changed on a dime.
Right.
And knowing that possibility was there, knowing how, really our house was built on sand there for a couple of days, and us knowing that, we were able to lock in a lot of loans, save customers a lot of money on that kind of deal. So it's just so important, and because it does swing that fast sometimes.
Yeah, I mean, this was Friday, right? So April 4th. I remember this day. I'm talking to some borrowers, and they're like, "Hey, I think we're going to write an offer this weekend. Hey, fantastic! Look what's happened, man." And then you get the contract late on Monday, and you're like, "Well," and that's a tough conversation for a loan officer to have. But we're just trying to report the data, and that's why we believe big time here about transparency. Look,
yeah,
you got to know what's going on, and you have to have a good idea of a loan officer of what someone really wants to know and what they need to know. And this is what you need to know is what's the market doing, and we don't control these interest rates. And so I like to share this with all of my borrowers and have them kind of partake in the fact of what's going on in the market. I want to get you the best rate that's out there, but we don't control back-to-back days like this. So I talked to this borrower on Friday. Life's good. They get me the contract late on Monday. Well, let's see what happens tomorrow. And then, back-to-back days. And so the bottom's falling out, and then it starts to go back up and falls again. But we're on a good little run here, aren't we? It looks like we've had probably over a week of good things. And we've broken through some levels of resistance through the 100-day moving average and different things like that. But I think, what do you think, that we may be able to hold this position for a little bit longer?
Yeah, that's what I think. I think, and look, I think consistency and flat is always a good thing, just because there's not a lot of crazy moves going. There's not a big swing from whatever the high rate to a low rate, or a low rate to a high rate. But these last few days, you're right, they have been. The last part of April has been good. I mean, we've seen the rates kind of move down, the 10-year Treasury yield move down, so we're seeing some positive things. And just a little consistency in the market's a good thing too. Sometimes it gives a little ease, it gives a little peace of mind, and I think we're seeing that a little bit too.
Yeah, I tell people too. You can see this was back in September, I believe, right? So this is the lowest that rates had been in some time, really since the bottom fell out after COVID, right? And then back here, I mean, when we were just kind of talking about that Friday, that's the best rates had been since September the previous year. So I'm feeling like we can make a good run upward. And I think kind of going back to the PCE report, right, that we talked about earlier, that could be, a big factor in maybe holding this position. And because we have some room to rise, right? We have a little bit of room to rise. And so one of the things that I wanted to talk to you about, Jeff, because I know you're doing this as well as I am, are there's certain things that I've been talking to my borrowers about doing while the market feels like it's at a high level, and we're talking about potential, right? We just started this conversation off with 75 basis points potentially by the end of the year, right? So one of the strategies that we talk about sometimes is doing a temporary buy down. And this is different from a permanent buy down, right?
Yeah.
Permanent buy down, you are paying that money up front and you are permanently buying that rate down for the life of the note, whether it's 15 or 30 years. A temporary buy down, there's three strategies. I think that we use two, the most. The first one being a 1-0 buy down, and then the second one being a 2-1 buy down. And I want to talk about those a little bit here as I share my screen. So essentially, Jeff, the 1-0 buy down, we call it that. You're buying down your interest rate for 1 year, okay? And so that first 12 months, you get a 1% lower interest rate. So think 1-0, 1% down for 1 year. And so in the example that I have here, this is a $400,000 home price. Borrower's putting down 20%. I wish we were at 6.25 today, buddy. Let's just say, yeah, I know. Let's say it's 6.75, right? And we're going to do that 1-0 buy down. Look how much that customer is saving right here in that first year. Basically, a little bit over $200 a month, $24.96. And so essentially, what we're doing is we're hedging that borrower's bet, right, for that first 12 months. So hey, I know, Jeff, that your rate's going to be 6.75 in month 13, but we hope we never pay that rate, right?
Exactly.
So we're going to buy that down. So that first year, the interest rate is 5.75%. 5.75.
Damn, that sounds good.
I could get your rate at 5.75. Your phone, we would be ringing off the hook. It'd be like, okay, so we can still get 5.75 for you today, that first 12 months. And then let's look at the market in month 13. Now, I don't know if we'll be able to get 5.75, but if we do get the 75 basis points that the Fed was talking about, don't you think there's a chance in month 13 that we can get somewhere in the neighborhood of low sixes maybe?
Definitely, without a doubt. Without a doubt. I mean, it's a good hedge. Like you said, it's a hedge on our end and for our borrowers. And I think it's a great way to do it. I mean, what's that old saying? You marry the house, you date the rate. Isn't that what everyone says? Isn't that
that's
like
it.
That's on every T-shirt and meme from every real estate agent in the country right now?
Yeah.
Which I get, and it makes perfect sense. You're right. You might refinance your house 2, 3, 4 times while you live in it over 10 or 15 years, or even 6, 7 years, depending on what rates are doing. But if you can take advantage of a 1% lower rate at the cost of not yours but someone else's, why wouldn't you do it? That's like a free tank of gas. I mean, come on, you're going to take a free tank of gas
every day. And the cool thing is, because people talk about, well, then I may have to refinance. Absolutely. And just so you know here, give us a call, 855-699-1424. We can talk about this in more details, but we make it super affordable for our customers when they come back to us, right, to get that reduced cost. We're not going to make you pay, lender fees again, and we'll pay for the appraisal, different things like that. We can talk about that more if you give us a call at 859-699-1424. But if you save $2,400, almost $2,500 that first year, you're essentially we're paying for those closing costs, right? So when you do have that opportunity, you're really hedging your bet that first year. And the next thing I wanted to point out, if you're a seller out there, if you are listing your home, you know how to make your house really attractive right now? Pay for a 2-1 buy down.
Yeah.
2-1 buy down. So we talked about the 1-0 buy down, right? 1% for 1 year. The 2-1 buy down for the first year, it's 2% lower. The second year, it's 1% lower. And then that third year, you would go to your note rate. So if I told you, Jeff, today, your rate's 4.75%, do you think your phone would be ringing?
Yeah, sure, I might hug you. I mean,
so sellers, if you're out there and you're thinking about ways to make your home more attractive, you can pay for this buy down for anybody buying your house.
quit cutting your price, man. That's the damn dumbest thing in the world. Stop cutting your price. Your price isn't the problem, all right? Your house is worth it. You know it. We know it. They know it. Find creative ways to do it. Sorry, I don't mean to yell. I'm just saying.
You're good.
That's what everyone wants to do. They cut price.
Don't do it.
No.
Don't do it. You're not solving the affordability equation for the borrower.
I mean, let's be honest. What you cut the price $10,000. What's that change in mortgage payment? $22. I mean,
yeah. And Jeff, how much would it cost for the seller to do a 2-1 buy down? $7,300.
Yeah.
$7,300. But instead, you'll say, well, let's lower it $5,000 or $10,000. Okay. How about you give your borrower for $7,300 a 4.75 rate that first year and a 5.75 rate that second year? That sounds like you're saving that first payment. That's over $400 a month. If you were to reduce the price of the home, like you said, by $10,000, you're not coming close to $400 a month.
You're not.
Now you're giving that potential buyer of your home, you're hedging that rate bet for them, and it makes it so much more affordable. So,
look, people buy when there's something. I mean, they gotta love the house, they gotta like all that. That's important, but there's got to be when there's something tangible that they can touch and taste and feel. And a 10% discount or a $10,000 discount on a home. I mean, when you're talking 400, 500, 600,000, I mean, hell, prices are crazy anyway. When you're talking that kind of money, a $10,000 discount doesn't seem like a lot. Yeah. But if you're telling me I can save 10% of my payment on a monthly basis, or in this case, probably 20% year 1, 10% year 2, and then in year 3, I'm back to normal, that is a tangible benefit. And it takes, I mean, thank God, Jerry, here in Kansas City. Now, look, we can't speak to everywhere all over the country, although we do work with a lot of real estate agents all over the country. But here in Kansas City, we work with some really great real estate agents. I mean, between the two of us and all of our people around, and they understand the benefit of things like this. But that's where you need to, you want, I mean, as a seller or even as a buyer, you want a creative real estate agent that is using common sense. Because to me, cutting your price 10 grand is lazy as hell. And yeah. I mean, that's just my opinion, maybe.
Yeah, I personally wouldn't do it. And so agents, if you're out there, don't reduce the price of the home. We beg you, pay for the buy down, pay for the 2-1 buy down, and watch how quickly your house sells. But well, Jeff, my friend, this has been awesome. I always love doing this stuff with you. We need to do it more. We're going to keep an eye on that market, right? Tomorrow we get that PCE report. Hopefully we get some good news there. I think we have some more. What's coming out on the job report on Friday? So lots of big news happening this week. We'll keep our fingers crossed that it is definitely favorable for mortgage rates. Yeah, buddy.
And guys, next week, make sure you stay tuned for next week. We're going to talk about a couple different things. We're going to talk about using home equity. All right, using home equity to your advantage to do a lot of different things. We've got so many different examples just over the last 45 days of how we've helped people use home equity to do a lot of different things in their world and clean up their financial picture. And, I got one guy that's going to retire about 5 years early because of some of the things that we did. So
I don't know the number, but the amount of liquidity that's in people's homes that's not being used it's almost, I just don't think they know, Jeff. And so you can tap into that equity in your home. I had a customer, I'll end with this maybe. customer that we just closed on, and you get this question too. Hey, I've heard if I make, an extra payment a month, or I make payments every 2 weeks, the biweekly payments, that I can potentially pay my home off faster. Yes, but they had credit cards. They had a car payment. Okay. Your home is an appreciating asset that in some instances, most instances, is tax deductible interest rate. Last thing you want to pay off. Use the equity in your home to create wealth. Let's talk about that next week. What do you say?
Amen. That sounds good. Guys, to contact us here, it's 855-699-1424. Or if you're proactive like me and just like to get stuff done, check out nationalapplynow.com. Any of us can help you out on that. Jerry and I will be more than happy to answer any questions you have. Jerry, till next week. I'm excited for next week, man. This is going to be fun.
Let's do it, buddy.
All right. Take care, guys.
All right.